When I prepare, I have a few slides here I'll run through, but before I do that, I'd just maybe respond to some of the previous speakers, as that was the title of my presentation. I'd say I have to agree with a lot of the points Damon made earlier on. However, what struck me during that was how so much of what needs to be done in these situations is really in the hands of the lawmakers, the government, and I suppose when people hear that financial regulation should have A, B, C, D, etc., they tend to assume that the financial regulator has the power and the jurisdiction over these matters, whereas very often they don't. And I think that was quite clear in the Irish situation as well. And again, this was further emphasised, I think, by Terence and Jim in their presentations. Eleanor's talk on stakeholders was very interesting, and she asked, should regulators interfere in the stakeholder relationships? And, well, of course we do, and I think we have to. We interfere in a number of ways. In particular, we interfere in the sense of their relationship with consumers, and we interfere where they're lending money to borrowers where we think there's rules around how much they can lend to specific borrowers and to specific sectors. I think that has to be done. Is regulation a substitute for trust? I'm not sure if it's a substitute. I think it's an addition to. And she also asked, can the balance be struck between regulation and trust? And I think it can, but in order for that to happen, there has to be equal power. There was certainly an inequality of power. I think the pendulum has perhaps swung now in the other way, and so we're not in a balance at this stage either. But, you know, that would be a place that I think we should try to get to. I wouldn't argue much with what Margaret had to say either. However, I hope we can demonstrate in the next few slides that we're trying to do something about what she was illustrating. I'm not so sure I would go along with Jim's remarks about the German banks, the source of their issues being in the IFSC. Certainly some of those banks had operations in the IFSC. I think in the case of Hypo, their bad loan book came from Hypo, not from DEPFA, and the DEPFA issue was much more one of dependence on short-term funding. But enough about that. I'd like to maybe take a few minutes to quickly go through some slides I have here. I won't go through them all with the same level of intensity because there's too many of them here. But I'd like to at least let you know what we're doing in the central bank, particularly in the financial regulatory area, and how we're recognising what went wrong and what needs to be done. I noticed in Stephanie's discussion this morning some of the key issues that she identified internationally were leverage, maturity mismatch, insufficient capital, and pro-cyclical accounting and regulation. Domestically, Honohan recognised an awful lot more wrong with the regulatory framework in Ireland and with the way it was operated. None of those comments will probably be unfamiliar to any of you, so I won't delay on that slide, but there was certainly a lot of things, a lot more involvement in the EU supervisory arena to shape things in the sense of our experiences, and a lot of organisational change. I'll skip through this slide, but it's roughly going through some of those same things, but it's a little bit more detailed. So the financial measures programme was and continues to be an important means for us to monitor the institutions by undergoing a really detailed annual stress test. We've done it this year, we'll be doing it again in 2012. This is not something we will do every year ad infinitum, but it'll be there for another year or two at least. It's a very detailed look at the books and the forecasts of the institutions with detailed modelling on an actual loan based approach, so it's a bottom-up analysis. We take a lot of data out of the banks, all of their loans are put into data files, and we run a lot of models on them. So it's a very detailed analysis. This is a very important area. This is the whole supervisory approach. As Matthew Elderfield has said on a number of occasions and in a lot of our publications, it's really important that we adopt a very assertive risk-based approach. And question is, how do we go about approaching the whole idea of assertiveness? It's very easy to say it, but actually to change behaviours is a much more difficult matter. So I'll talk about that in a little bit, but that's the key to being assertive, is behavioural change. The other thing we have is risk-based supervision, which is identifying firms on the basis of their impact on the economy and the environment and society, and then identifying the risks within those firms. High impact firms get much more scrutiny than medium high and medium low and low. We're adapting a new mechanism to roll this out beginning next year. The final element of the triangle, if you like, is the enforcement, and we've really beefed up the enforcement efforts in the central bank so that there is threat. This approach we're talking about, a prism for our risk-based assessment, is trying to assess the impact of an institution on the economy. And we're doing this for every institution in the central bank, not just banks, but all of the regulated firms. What it means really is that we're prepared to allow low impact or even medium low impact firms fail, so there will be failure in the system, and concentrate resources on those areas where impact is greatest. We also look at the risk probability around very key areas, and we assess each one of those and we score them, and it's not a rota-based scoring, it's not a model-based scoring. There's a lot of judgment and an awful lot of work goes into the actual scoring of risk. The end result of all of this is risk mitigation plans for the institutions, which are enforced, which are followed through, and where they have to meet strict deadlines on implementation of amendments to the way they do business, or restructuring balance sheets, or whatever else is required governance-wise in terms of boards, executive management, etc. Internally, we have balanced scorecards, which are a new organisational accountability, responsibility mechanism. We have a whole new project management group, which is really all around change management in the institution. We mentioned earlier that one of the key issues around introducing an assertive behavioural supervisory format is to have the people that are able to do it. A lot of the time, people who have been used to working in a certain way find it very difficult to change. So we have brought in, we've increased a lot, the manpower, you'll see in a minute, has jumped significantly from about 350 to about 700 people in the last few years. A lot of those people who have joined have come from a variety of places, both in the financial services sector and in other places as well. So there's a great diversity now in the central bank that was never there before. So a lot of the people, probably almost 50% of the people have very short tenure already, so they're bringing in a variety of skills, experience and behaviours. There's also a major change management project in the organisation to instill a new behaviour. That's just an illustration of the manpower. So as I said, 350 to 700, and the change management programme is ongoing. There's also a legislative and regulatory change programme that needs to be implemented. Some of it has been done, there's a bunch of it still to do. There's new fitness and probity legislation, our power has just been given to us by the 1st of December this year, and there's a new bill on its way also for the central bank, hopefully implemented next year early. But without these things, the central bank hasn't got the power it needs to have in very many cases to make change. That's some more of the same. I'll go through some of these quickly. Consumer protection. There has been quite a bit of change to the Consumer Protection Code. It's not as prescriptive as Margaret would like, I'm sure, but a lot more to come. And particularly, there's a lot of work going on at the moment in the area of mortgage arrears. I'm not sure, was it Jonathan mentioned or somebody mentioned earlier in one of their talks that Matthew Edelfield had all the CEOs in this week. I was at those meetings as well. And they are to, really to get the banks to come up with very I suppose, longer term and more encompassing strategies with regard to dealing with mortgage arrears and to the people in arrears. The government's made some announcements yesterday as well, but I think the responsibility is still with the banks to actually make the whole strategy work. And we'll be doing an awful lot of work with the banks over the next 12 to 18 months with a real emphasis in this area. Stakeholders was one of our earlier speakers. Yeah, we have a lot of interesting stakeholders. And I suppose from an industry perspective, we tend to engage mostly on a sectoral basis. So banking supervision engages with banks, insurance supervision with insurance, etc. But we do have a lot of cross-sectoral engagement as well, particularly when it comes to consumers and also where you get financial conglomerates. On the consumer area, we have a consumer advisory group, and we also engage with these and through that group a wider audience. Very comprehensive engagement with the government, particularly the Department of Finance naturally, but also in terms of EU Council support and EU Commission support. And a wider area, we have a lot of engagement with the Troika. I didn't put them in, but I don't know which box they fall under, but certainly we probably as much engagement with them as we do with a lot of these other stakeholders. Wider community, well, I think you find a lot more transparency in the way that the central bank is working. Matthews Elderfield, Patrick Honohan are very open in public, plenty of public meetings, plenty of public speeches, and the aim of the central bank is to be as transparent as possible now going forward, rather than hide behind a cloak of secrecy. European financial supervisors is a big arena, and we are trying to play a much more meaningful role in that. That's just a diagram showing what it looks like. And there is obviously much systemic risk, and well, the shadow banking I thought came up in one of the other speakers' notes, so I just put something very quickly in on this, and this was really just to say that the shadow banking, I suppose in Ireland, is a very it's sort of an indirect thing. It's probably in the IFSC mostly, so its activities in the IFSC may be affected by what's going on in the wider international arena. Thank you very much.